Joined us. Mr. Sharma, good morning. Shesha this side, and thank you so much for taking your time out and joining us here on ET Now. And let's start with the numbers that you reported on a year-on-year basis. Very strong revenue growth of about 48% this quarter, and the order book position has also now crossed that 3,100 crore mark. You've also guided for about 40% growth over the next 3 years. Given the geopolitical uncertainty and uncertain times that we are living in now, how confident are you of achieving this 3 year roadmap that you have shared with your investors? Mr. Sharma, please unmute your mic.
Sorry. Thank you so much for having us here. We certainly have put up very good numbers on the quarter one for this particular year, and we continue to do so for the remaining year 27. Strong performance is driven by many factors, and first and foremost thing is the demand, which is coming from all quarters. And given the geopolitical situation which we are seeing, the thrust on the electrical energy segment or the non-fossil fuel base energy is going to increase only. And that is something which we have seen of late for last 3-4 months. The thrust has shifted to the electrical energy, may it be RE, thermal, hydro, etc. And we feel that this particular thing is going to continue. And as long as this shall continue, the transmission and distribution sector, wherein we are a fundamental part of that, we supply one particular very important element of the entire infrastructure, which is transformers. This is going to be the flavor of the game in coming time. So we are pretty confident that this momentum which we have gathered is going to continue for coming many years.
Okay, so the momentum is likely to continue, and you're very confident of the growth outlook that you shared with your investors. And of course, the thrust on clean energy continues to remain positive for you. But if we look at the numbers on a sequential basis, we did see some bit of weakness. Was it fully attributable to seasonality, or were there other factors at play?
I would call it to the seasonality. I would attribute it to the seasonality only. In India, if anywhere you see the quarter one is not comparable to the quarter four of the previous year. So that's the story everywhere. But if you compare our quarter one numbers of year 26 versus year 27, we possibly can see there we have registered a strong growth, and these numbers are going to continue for the rest of the year.
Positive momentum for the rest of the year. But let's also talk about raw material prices, because I believe they've remained elevated because of West Asia. One, how much have costs risen by? And two, how much of this has been passed on to the customers fully already?
We are blessed to have we have been following this strategy of having a major percentage of the utility orders, which comes with the price variation formula. And with the help of that price variation formula, whatever volatility comes in the market of the raw material or the commodity, we have been able to pass it to the customer. And this has been the case of late also. So I would say we are quite unaffected by the volatility of the commodity prices of late. And that should remain the case, because our percentage of business which is coming from the utility remains unchanged, and we have not thought of any, let's say, change in the strategy of what we have been adopting till date.
Understood. Meanwhile, you've also given EBITDA margin guidance of about 16 to 16.5%, and you've also said that margins could trend towards 17 to 18% as operational scale further. How soon could you get to that 17 to 18% mark?
We are confident that, see, this, first of all, we are not expecting any major change in the EBITDA numbers in coming couple of years for sure. Why we say this, that, see, we have put up a plant which is going to manufacture 400 kV. We have acquired a plant which is going to manufacture 765 kV. Now, these kV classes certainly do have, let's say, limited competition, and hence we are expecting the margins should be better. But it would not be fair on our part to predict anything. See, we have not manufactured 400 kV and 765 kV products till date. So it would not be right on our part to put any guesstimate on the table as to this is going to be the EBITDA numbers. But yes, given the supply and demand dynamics, we expect the margins in the 400 and 765 kV segment are going to be better. But again, we would be having the development cost for, let's say, producing or developing these products. So whatever additional EBITDA numbers or EBITDA margin we shall be earning, we hope that that will be set off by the developmental cost for next couple of years. Year after those, certainly, we certainly can expect that margins should improve from the levels where they are at the moment.
Okay, so margins will improve over a period of time, but in the short term, they are expected to largely remain steady. That's the word coming in.
Yes.
Meanwhile, let's also talk about exports then. And I believe you are targeting about 15% of your revenue to come in from exports over the next 3 years. Have you already started receiving export inquiries and order inflows?
Uh, in terms of we have not been doing exports. That's something which everybody knows. But why we were not doing, there were a couple of reasons. We were not having the capacity, spare capacity, I would say, for tapping the export market. But last year, with the addition of two new facilities, wherein we have quadrupled our capacities, we have started approaching overseas customers, and there is huge amount of requirement of transformer in the overseas market, be it the USA, Europe, Middle East, Africa, everywhere we see. So we have started talking to these customers, and since there is a real vacuum in the supply side of the transformers, we are receiving good amount of inquiries. But as we have been telling, let's say our investors, that we want to move pretty cautiously. We do not want to jump onto every inquiry just like that. We would certainly be spending some amount evaluating these markets. And once we are sure that the customer we are going to align ourselves is going to be a long-term player, we shall start doing the business. So yes, we certainly would be seeing some, let's say, traction in this particular year. And in 3 years' time, we do have this objective of taking the export revenue to 15% of the overall revenue.
Understood. Let's also talk about competition from Chinese players. And is that having any impact on pricing at all now that Chinese players are also allowed to participate in PSU tenders? Is competition a concern for you, either in terms of order inflows or in terms of pricing pressure?
See, this has been the talk of the town, I would say, for last couple of weeks. But if we, let's say, let's say filter it down. So out of 4 players, there is only one player which is manufacturing transformers, and others are the switchgear players. So in terms of the capacity addition in the transformer manufacturing sector, we have seen many other MNCs and the domestic players adding capacity. So the Chinese player, which has been allowed of late, is going to be one more addition. And I don't feel, officially and personally, that there is going to be any thing which we should be worrying us, because the demand is more. Demand is there for everyone. There is no dearth of business for anybody in the market who is there at the moment or who possibly would be wanting to come in this particular market in a time to come. So since there is no shortage of the business, I don't see any pressure coming on the margins or the let's say business totality of the business revenue, etc.
So there is no dearth of demand, and despite Chinese players now entering the market, there is no concern with respect to demand. That's the word coming in. Mr. Sharma,
Yes.
thank you so much for taking your time out and joining us here on ET Now, and we look forward to interacting with you more often here on ET Now. Thank you for joining us today.
Thank you so much. Thank you so very much. Good day.
On that